Hello. Today we're going to go over one of the most important documents in any loan process. That is the initial disclosure that you get, which is called your loan estimate. Your loan estimate is one of the most important documents that you can have. It sets the table for the entire transaction. Hello, my name is Lurvey, 25-year plus veteran of the mortgage industry. My channel that you've landed on here is all about the home loan process. I invite you to watch more videos. This particular video, I think, is the most important, if not the second most important video of all. And that is the video that describes what you're getting. And that is a brand new home loan and exactly what it entails. Many home loan originators or mortgage originators do not do a very good job explaining this to their clients, you, the borrower. I'm going to go from the top of page 1 to the bottom of page 3 of the document and explain every situation that you might see here on the loan estimate. So let's just dig in and go. Here you can see this is page 1. I'm going to skim through page 2 and then page 3 of the document. We're going to look at page 1. We're going to look at the top. We're going to start right here at the top section and just continue to work our way all the way to the end. Here you can see this is the bank name, fictitious bank, and the address. That's your lender. That's the person giving the loan. Over here it says, save this loan estimate to compare to your loan or closing disclosure. Key point here. Make sure and save this, reflect back on it when you're at your final, when you're at the very end, and make sure that what your originator and what your lender talked to you about is the same. Important information here. Going down the second section, which is the date issued. Very important, this document has to be given to you within 3 days of you saying you're ready to go with the lender. That means they have all of your information, they have your property address, you're ready to go. When you get the document, make sure the name's correct. Okay? Are you buying the home under Michael Jones or are you buying the home under Michael David Jones? Have those discussions. Make sure your current address. Okay, this is where you rent, you own, wherever you live right now. Make sure that's correct. Next section, your property. Make sure that's correct. This property address is 456 Somewhere Avenue. If it's 456 East Somewhere Avenue, have a discussion with your loan originator. Maybe the purchase contract or maybe this document is not correct. Make sure your city, state, and zip is correct. Sale price. All right? This might seem trivial. You might know what your sale price is. You might know it's $180,000, but your loan originator might have $200,000 in here. There's a couple reasons why he or she might not have it correct. One is maybe they just sent your disclosures out based upon your pre-approval of $200,000. Maybe there's so many addendums, including counter offers back and forth, that he or she might not have the exact amount of your purchase price and maybe missed a counter offer. If it is different, just let them know. They'll update the document and they'll send you new disclosures. Next section, column number 2 at the top half over here. This is your loan. Very important information. Did you discuss a 30-year fixed rate conventional mortgage? If so, it should state that. If you and your originator have been discussing a 30-year fixed rate FHA loan, then why does this say conventional or vice versa? As far as your loan type, it's either going to be conventional, FHA, VA, or you could have a box over here that's checked and said USDA, or some other type of loan product. Okay? Very important to make sure what you've talked about is what's on this document. Your loan number. You know, we're not going to spend much time on that, but that's your loan number. If somebody asks what's your loan number, then that's the loan number that you're going to give them. Your lock. Super important piece of information here. Okay? Did you lock your rate in? Did you request your rate to be locked in? Did this disclosure show your rate locked in, but you didn't want it locked in? Maybe you requested it to be locked in, but the box is marked no, that it's not locked in. These are conversations that you've had with your mortgage originator. Is your rate locked? We can see on this one that our rate is locked through 4/16. Skip the year. I mean, this is an example disclosure from several years ago that I'm using. That's produced by the regulatory agency. And I can see here that my lock is from 4/16. I locked it. The date of this document is 2/15, so that looks like a 60-day lock on the surface. Make sure whatever you talk about, if it's locked or not locked, that the rate is locked. Next section, loan terms. And I'm moving along through here. You can pause and stop the video, pull out your loan estimate, and make sure everything's fine. If you have other questions on certain sections or just about the whole loan process at all, refer to my channel. I got a lot of videos in there that cover the mortgage loan process. Next is your loan terms. Okay? We have a purchase price of $130 or $180 we already talked about, with a loan amount of $162. Okay? Center that a little bit. So this is an $18,000 down payment, correct? Our math is 180 minus 162, 18,000. 18,000 of 180, okay, is 10%. So it looks like this borrower is putting 10% down with a loan amount of 162 and an interest rate of 3.875 with a monthly principal and interest. And again, just the principal and just the interest, not your taxes and insurance, on this top section is $761.78. Okay. Can this amount increase after closing? No. Let's put a bunch of explanation points there. No, it cannot. If it does, there's a problem with the lender or the servicer. Okay? This is a disclosure. It cannot change at all. Next section. Prepayment penalty. Does this loan have a penalty if you pay it off early? Under this example, there is a $3,240 penalty if it's paid off prior to 2 years. Okay? Most loans, including our loans, they do not have prepayment penalties. So on your on your loan estimate, this should be a big fat no. But under this example, we show what it looks like if it was a yes. Is there a balloon payment? Okay? You might not even know how to answer that. Yes or no. A balloon is a large amount due after a few months. We'll say after you've made 60 payments, which is 5 years. Okay? You've paid it down from 162 to 145, and that's all due. That's a bad deal for you. Do you still qualify then? Can you still make those payments? Can it be refinanced? Whatever. You need to find out if it's on a balloon or not. This loan is not a balloon loan. So it's going to be this payment for 30 years. Period. No balloon. Okay? If it does say balloon, talk to your mortgage originator. The next section is projected payments. All right? This section goes over what your payment includes with taxes and insurance. Principal and interest, we talked about that. $761.78. This loan, remember, because they put $18,000 down, which is only 10%, and they did not put a 20% down payment, would have mortgage insurance. Any loan that doesn't have 20% down would have mortgage insurance. Escrows. This is your taxes and insurance. Okay? And then your total payment, your first 7 years, is going to be roughly $1,050. Then this outlines, which is very good, that on year 8, your mortgage insurance goes away. Why does it go away? Because the guideline says once you've paid down your home loan, 78% of your purchase price, original purchase price, your insurance goes away. If you make your regular payment every month, $761.78, then starting year 8, your home insurance, your mortgage insurance should go away. Next section is your estimated taxes and insurance. This section discusses, do you have an escrow account or not? And how much is your taxes and insurance divided out over 12 months? It's $206. Are we escrowing? Yes. Is home insurance being escrowed? Yes. Both your taxes and insurance are being escrowed, as mentioned with your total outgo up here. Okay? Next section is your closing cost. Very important section to know exactly where you're at when it comes to your funds to close. This loan has $8,054 of what we call closing cost, okay, which in essence is your cost plus your prepaids. $5,062 is your cost. $2,382 is what we would call prepaids and other cost of the loan. And we'll get into that on page 2, how we get to these numbers. Right here, it shows your cash to close. Once we close, it's $6,054 on an estimate. And again, as a lender, we have to be really close to that estimate. The simple math here doesn't work out, right? $180,000 purchase price, $162 loan. That's an $18,000 down payment, okay, that we have to have. Our closing costs are $8,054. That equals $26,054. Oh, where's the math at? $6,054, $16,000, we're $10,000 off. Okay? That leads me to believe that this buyer has put a $10,000 deposit down. Okay? The whole point of this exercise I just did right here is to eliminate confusion and to provide transparency. The amount to close includes any deposits that you've put down, whether it's 100, 500, 1,000, 50,000. This is what you have left. A lot of my buyers are very confused about this. They think this should be their all-in number. It's not. It's your estimated cash at closing. Okay? Keep that in mind. Their all-in number at this point is around $26,054 with a $10,000 deposit. All right? That's page 1. Now we're going to look at page 2. We're going to go and we're going to break this down in 2 columns. Column 1 and column 2. Okay? We're going to zoom in on A on column 1. This is an important section because this tells you what the lender fees are. Okay? These are what we call lender fees. All the other fees you see on this should be apples to apples with every lender out there. Just because you see an estimate from one lender to lender 2 to 3 to 4 on any section besides A, at the end, it should be the same. It's just a matter of how those are portrayed and shown to you. Section A is different with every lender. So let's focus on that. Let's look at the first line. Okay? Actually, you know what? Let's back up here for a second. This total that you see here of 1,082, that's the total of these items here, which is $1,802. Okay? It's kind of a backwards, the total's on top versus the bottom. Some people ask me, okay, do I add these three things with that? No, that's the total of these three things. Okay? One of the things required to get the 3.875 rate is to pay 0.25% in points. How do points work? I get asked that question a lot. And there's a video on my channel that kind of goes over points, or it does go over points. But in this case, we have a $160,000 loan amount, right? I'm sorry, 162. Let's just clear that there, 162. Okay? 0.25% times 162 equals 405. Okay? You can either do 0.25% or you can go 0.0025. Times it by that is how you get to 405. And that's how you get your 3.875 rate. Well, say you want 3.75. Okay? This could be 1.1% to get to there, which would be, instead of 405, might be 1620 to get to there. This is the only thing that can change in this section up here. Now, when you're locked in and you've signed this disclosure for 3.875, they can't charge you higher than 0.25, period. They can't come back on your final disclosure and be 0.375 or 0.50% for a 3.875 rate. This is all they can do. The next fees. Every lender is different. Once I said, what I said was, this is the only section that's not apples to apples, meaning it's not the same at the end, at the closing table for every lender. This lender is charging $300 for an application fee, $1,097 for an underwriting fee. Okay? These cannot change, period, to the upside during the whole loan. They can go down, they cannot go up. Keep that in mind. Next section, B. These are services that you cannot shop for. You can't shop around for an appraisal and try to get a better price. The appraisal system, it has to be ordered through a system that is that is a non-biased system where it goes out to an appraiser that just goes and appraises the property without any communication of loan amounts, purchase prices besides the purchase contract, and things like that. Credit report fee, that's non-negotiable. You can't dial up your Experian app and pull your credit and give it to us and say, okay, this only cost me $9.99. That's not the case. Whatever the lenders charge, they can pass along to you. Flood determination fee. The lender has to prove if your property is in a flood zone or not. Okay? They have to continue to prove that every year of your loan. And that's the monitoring part of it. Tax service. This is not to see if you've paid your income taxes. This is the tax on your home. The monitoring of that. Is it being paid? Well, you're like, you're the lender, don't you know if it's being paid or not? Yeah, exactly. We know we're supposed to pay it. We make payments. Sometimes they don't get to where they need to go, but we need to know if that's the case. And then tax status research fee. What's the status? Part of that. Has it been paid? What is the new amount coming up for the next year, and so on. You don't want to get that slip from the county that says your taxes haven't been paid. Section C. These are items you can shop for. If your loan requires a pest inspection, or a lot of people refer to it as a termite inspection, then you can go out and shop it, get it with somebody that is not involved in the loan, so a third party. And if it's only $75, that's all you have to pay. Survey. Do you need a survey? Not everywhere do we need a survey. But if you do, you can go shop for it. Title fees. Okay? Every area is different. Some areas use the same title company as the seller to save cost. Other areas use their own, the buyer and the buyer agent uses their own title company. The seller and the selling agent have their own title company. This is just a good faith estimate of what those title fees should be involved. And this says right here that you can shop. This is what we give you from a title company that is on our list. It's not necessarily a preferred title company, but it's somebody on our list saying this is what the fees would be. If you get your own quote, if you have your own title company and they're much higher, then you're abiding by those fees, which means that's something you can shop for. Whatever quote you get is what you'll have to pay. The next section, or I'm sorry, the total of this section, D, would be the total of what we looked at, A, B, and C. Okay? To zoom it out here just a little bit. So we're totaling up A, B, and C equals this. Does this number look familiar? 5672? It should. It was on page 1. So it tells you the 8,054 is including your 5672 of closing cost or loan cost, plus your 2382 that we're getting ready to discuss next. Okay, so column 1, page 2, column 1 is your 5672. Page 2, column 2, as we discussed, is your 2382. Let's go through those. Page 2, column number 2. We're going to start off with the government recording fees. Okay, this loan has $85 in recording fees. Those go to the county. Okay, that's probably a warranty deed, which gets the title from your name or from the seller to your name, and then the mortgage, which is a recording to show that we have a lien on the property. Next section, prepaids. Home insurance, 6 months. All lenders that I know of they collect the whole 12 months of homeowners insurance up front. So your home insurance is paid forward. It's paid 12 months ahead. If you buy the house tomorrow, your insurance is being paid tomorrow. It's not due until next year, same date. Okay? This example has 6, but it's 12. You have interest on the final closing from the day you close until the end of the month. If you close on the 20th and the last day of the month is the 30th, you have 10 days instead of 15 of interest at $17.44 a day that you would pay. If you close on the 10th, I think you understand, you have 20 days of interest. This example shows closing around the 15th. Okay? Closing around the 15th for about 15 days of interest. What does that mean to you? Your first payment's not due at the 1st after you close. It's due the following 1st. Okay? People ask me all the time, do I have 45 days? Do I have 60 days before my first payment? Well, it depends on what day of the month you close. If you close on the 20th of the month, you have roughly 40 days before your first payment. If you close on the 10th of the month, you have roughly 50 days before your first payment. Okay? That's how that works. Your payment is due on the 1st. You have until the 15th to pay it. Escrow account. Well, we have to start your escrow account. And it's a deposit account, you might say, where we can't earn interest on it, the lender can. It's where your money is held to pay your taxes and insurance when they're due. At closing, we need to collect a 2-month cushion. So your home insurance will work out at $100.83 a month. Your taxes $105.30. That equals $206.13. We saw on the first page it gave us $206 as your escrows. Okay? $413 is what has to be collected and started with your escrow account. The only difference between this document and your closing disclosure in this section is on your closing disclosure, you have what you call an aggregate adjustment. Sorry for my penmanship here, but it's an aggregate adjustment. What that means is there's a formula where we can only have so much in your escrow account at one time. All right. And you might see an adjustment, we'll say of $100. All right. With that adjustment, then we're only collecting like $313 at closing. You'll see that on your final closing disclosure. Next section, H. Okay. There could be other things in this section on your current loan estimate right now. Okay. Your title insurance policy. This is the owner's title insurance policy. You want this. You want to make sure that the title gets in your name. The other title fees that you saw in the other sections is to make sure that the lender is protected. You want to make sure you're protected as well. Then the total of these sections here is right here at $23.82. And again, we saw this on page 1 at the bottom here. So we've had both columns now put together, and that's how we get to the $8,054. Back to page 2 at the bottom, calculating the closing cost. All right. We saw on the front page that this was amount to close. But how do we get there? Well, it's your closing cost, which we saw. It's our 2 columns on page 2. It's your down payment, which we know is $18,000 because we saw $180,000 purchase price, $162,000 loan, and that equals $18,000, the difference. But what we didn't see on the front page is your deposit that I had mentioned whenever I was doing simple math of $10,000. Okay, you take that consideration, and then your final cash to close is $6,054. If you've negotiated the seller to pay for some closing costs, we'll say $5,000, okay, then your total cash to close here would have been only $11,054. Many of you out there have negotiated for the seller to pay some closing costs, which is an awesome thing to do. There's no sense you coming up with that money if you don't have to. Negotiate it. It works. Okay, that's page 2. Here's page 3, our final page of our loan estimate. Let's start right here at the top. In this section here is additional information about this loan. It tells you who the lender is, their license number, which is not filled in on this form, who the loan officer is, their license number, their email address, and their phone. Okay? If this is filled in over here, you're dealing with a broker, which we would call, the middleman. Okay? They're taking care of the transaction for you. They're not the lender. They're only a broker. Over here, they would funnel to the lender. Very important up there to know who you need to contact. Next section. Not sure why they call this comparisons, but we'll walk through it. Okay? This is saying after 5 years, in 5 years, you would have had paid $56,000 $582 of principal, interest, and mortgage insurance and loan cost. Okay? So our payment was roughly what? $761 times 60 plus your loan cost, which was around $56.72 if I remember right from page 1, and your mortgage insurance monthly times 60. This should get to your $56,582 in 5 years. Then it tells you in 5 years of that $56,582, this much, $15,773 goes to your principal balance. So if you start off with $162 minus $15,773, okay, you're going to come up with around $46,227, something like that. My math could be off just a little bit, as what your balance would be after 5 years. Next line, your APR. This is probably one of the most confusing things with my borrowers. They'll say, okay, I went to somewhere and I put in my $162,000 loan amount. I put in my APR, okay, in my payment calculator, and I'm not getting the principal and interest, the PI, principal and interest, that as it talks about on page 1 of the document. Well, you don't use this number when you're amortizing your loan on a payment calculator. You would use 162, your interest rate of 3.875, and 360 months or whatever, 30 years to figure what your principal and interest is. The APR takes in consideration your loan cost of, we saw, of $5,000, I believe it's $56.72. That takes that in consideration and says, okay, what's your total cost? You have your rate, plus you add in that. What is your APR now? Next is a very interesting line, total interest in percentage. Of everything you pay, what percent are you paying of interest? And this is saying you're paying 69.45% of interest. It's not saying your interest rate is 69.45. Of your monthly payments, add them all together and just take the interest portion, 69.45% of it is interest. Other considerations. You have to have an appraisal. And like I said, it has to be ordered through a third party. We can't have contact with the appraiser, nor can you or your realtor. It says we may order an appraisal to determine the property's value and charge you for this appraisal. We will promptly give you a copy of the appraisal, even if your loan does not close. You can pay for an additional appraisal for your own use at your own cost. We don't want to see your additional appraisal if you go out and buy one. It won't affect the loan. It has nothing to do with the loan. If it appraises for $10,000 more or $10,000 less than the purchase price, it doesn't affect your loan. In my 25 plus years of doing this, I've never had a borrower that actually goes out and do that, but you can do that. Assumption, key here. The only assumable loans that we do and most lenders do is a VA loan, okay? And if you do an assumable loan, you're assuming the principal balance left, you're assuming the payments and everything on that loan. You're just kind of taking over the payments, but you still have to be qualified. And we know on a VA loan, you have to be a veteran before you can qualify for a VA loan. So a non-veteran cannot assume a VA loan. You have to be a veteran. Home insurance. We know everybody knows you have to have home insurance. This loan requires home insurance on the property, which may obtain from a company of your choice that we find acceptable. Okay? You get to pick who your home insurance is going to be with. We don't pick. Late payment. Your payment is due on the 1st of every month. You have a 15-day grace period, which means you can pay your payment from the 1st to the 15th without any additional penalties. So, what goes towards your principal, what goes towards your interest, it doesn't matter on a mortgage loan. If you paid it on the 30th, 31st, which is a couple days before the 1st, or on the 14th or 15th, a couple days before your grace period's up, the same amount still goes to principal and interest every month. Unlike a car loan where it's based upon what day and when you pay. A mortgage loan every month has 30 days of interest, and it doesn't matter what month you're in. You could be in February, January, May, it doesn't matter. Every month has 30 days of interest. Refinance. What this is saying is, just because you got your home loan, it doesn't mean that you automatically qualify for a refinance someday. Refinancing this loan that we're talking about, will depend on your future financial situation. Okay, you still have to qualify. The property value and market conditions. You may not be able to refinance this loan. So, if you get this loan, you buy this house for $180,000 purchase price, and the market tanks to $150, we'll say the house is only worth $150 now, it's going to be very difficult to refinance that loan. Next thing is servicing. Okay? Servicing is what? What is servicing? It's who you're going to make your payments to at the end. Every month, who you're going to make your payments to. Many lenders will loan you the money, but then they'll sell your servicing to another lender. Maybe 2 or 3 times before your first payment's even made. It's very important to find out who you're going to make your payments to. Sometimes some lenders don't know that might be loaning you the money. But if they're going to be servicing your loan, they can pretty much tell you, chances are that we're going to service your loan. We service 90% of our loans. So it's very important to find out who you're going to be making your payments to. Final section of page 3. And this is very important. It might seem trivial. It's a signature line. But by signing this, all you're doing is confirming receipt of this document. You can make notes. 3 or 4 things can change, but all you're doing is that you've received this document. It starts a clock, you might say. Nothing can happen until you have signed this, that you received this document. Very important. You're not binding to a sale price. Maybe it's on here different. You're not binding to certain things. If you confirm receipt of this, and that's what it says, you're confirming that you have received this form. You do not have to accept this loan because you have not signed or received this form. Okay? So it's very important to just confirmation that you received this. You don't have to move forward with the closing at the end, or even after you've confirmed receipt of this. But if things need to be changed, it needs to be changed, and you need to get another one of these forms to confirm that change. Say, hey, mortgage guy or gal, I've asked my purchase price to be changed. Can you please send me another loan estimate? Stay on top of it. This is a very important decision. This is a very important transaction. And it takes your involvement and your understanding to make this go just perfectly. I hope you've enjoyed this. I have many more videos that tries to help you understand the loan process. Check those out. Subscribe to my channel. Whenever I do post something, you'll get a notification of that. It might be during your loan. It might be something important with the market or market conditions at the time. Good luck to you out there. Enjoy your new home. If there's any way I can help, DM me. Here is my Instagram. I would love to hear from you possibly in the future. Have a good day.